Hello everybody, this is Alex from Paramig Financial Services. Hope everyone's having a good day. Today I have Frank, my colleague here.
Hello everyone, this is Frank, also from Paramig Financial Services. And today I'm going to be joining with my relationship manager in the office, Mr. Alex, to talk about his interesting topic, which is stocks.
Yeah, thanks for joining us, Frank. Really appreciate it. It's nice to kind of change it up sometimes. Recently we've been doing content by ourselves, but it's nice sometimes to kind of have a partner with you, right?
Yes.
My content lately, I've made some videos about basic 101 topics for the stock market, how to understand what the stock market is, how it works, how to buy and sell stocks, where to do that. And then our last live stream, I went over a module where I kind of showed us how a chart looked like, on how to kind of navigate around the chart and kind of look at a chart. I know the chart can kind of be intimidating to look at. There's a lot of different icons and indicators going on and colors and flashing things everywhere. So today I'm going to show you guys a little bit how charts work. More specifically, we're going to be talking about candlesticks and what they are. Those are the little green and red things on the charts that you see. We're going to go in depth of more what they are, how to read them, what things mean, and I'm going to give you two examples on how to identify like a buying position as an example using the candlesticks. So are we ready, Frank?
Yes, sir. And I just want to say something really quickly, that stock is not an easy topic. It's very complicated, but that is why me and Alex are here to help. I'm just like you guys, I'm really new at stocks, so I need guidance, right? But sometimes when you learn about stocks, it takes a couple months or years at least to master, to know how to trade. So hopefully you will stick around and have the patience, because we're here to help.
Thanks, Frank. I really appreciate your insight.
Yes, sir.
And now, as you can see, we're looking at our trading view. This is a platform I use to view my stocks and draw my charts and such like that. So we're going to go over candle wicks today. As we can see, we have one green and one red. Okay, so we're going to go ahead and read the top up here. It says candlesticks price action involves pinpointing where the price opens for a period, where the price closes for a period, as the high and the lows of a specific period. So what does that mean? So when just looking at this, it looks kind of confusing, right, Frank?
Mm-hmm. It is for now.
So let me go ahead and break that down. So when it means open and close, so say for an example, when the price ticker starts, it's going to start at the bottom here where the open is, okay? So say that price action is going positive, we're going to go on the uptrend going up, okay? So a full green candle means it's a buy pressure, okay?
Okay.
So we have a full red candle means sell pressure, okay? So as we can see, we have these wicks here. Are you familiar with what wicks are, Frank?
Not yet.
Okay, so as I said earlier, when the price opens, it starts at the bottom. And the reason why these wicks are bleeding to the bottom is that there was sell pressure originally pushing it down.
Okay.
And once the buy pressure pushed it pushed it back up. So same for the wick on the top. The top wick up here means that the buy pressure was so strong, it pushed all the way to the top of the wick. And then what happened was that the sell pressure pushed it back down, so therefore it levels out in the middle. Okay? So now let's give an example. The wick is going up, okay, and then it closes. So if it closes, it goes over here. This becomes the open, okay? So when one candle closes, it's going to open, okay? And then when this candle closes, where does it close? Down here, right? The bottom. So we're going to go ahead and read some more information here. When the open price depicts the first traded during the formation of the new candle, so that's going to be right here. If the price declines, the candle will turn red. So this would be on this side. Over here, I have some things that we see here. It says monthly, weekly, daily, and so on. These are different indicators that you can find at the top here that allow you to see different time markers. Just keep in mind, every time marker will display different candle wicks on the same chart.
Okay.
So candle wicks can also form individual formations which can indicate a buy or sell. So we're going to go ahead and show an example of that, okay? By observing the shapes of colors of candlesticks, as well as the patterns they form, you can get a sense of the market direction, okay? So what that means is that when you're seeing a green candle, that means what, Frank?
A buy pressure.
Correct. And then when we see a red candle, what does that mean?
It's time to sell.
Yeah, correct. So as we can see here, as you said, green candle indicates a buy pressure, a red candle indicates a sell pressure, okay? Sometimes we don't have candles that are directly full in green like that. Sometimes we'll have a candle that looks like something like this. It has the buy marker in the middle and long wicks. So this is an example of something called a doji. It's a black cross form when an open and closed prices are very close. So the open prices are very close, and is a signal that neither buyers or sellers are dominating. That is why we see a neutrality right here, okay? So let's go ahead and move over to an example of a position of buying and selling, okay, based off of the trend. So right here, we have something called a morning star pattern. So the morning star pattern, Frank, we usually identify when we see a sequence of red candles, which is a sequence of sell pressure, which is causing
Downtrend.
there you go, downtrend. Good job, Frank, good job. So as we can see here, we have a downtrend, and then we have a large bearish candle. That means it's extreme strong selling pressure, okay? Extreme strong selling pressure. And at number 3, we have a small bullish / bearish candle. It is an indecisive candle. So in this situation, you wouldn't buy here because there's an indecisive movement happening in the market. So we come over to number 4. What do you see here, Frank?
This is a large green candle right
You
there.
got it. There we go. So when you see a large bullish candle, that signifies that there is strong price action in the market. And as we move over to the next candle, this candle would be the confirmation candle that you're good to go in.
Okay.
You know, so as that happens, it jumps in, and then we have the bullish candle all the way to the top. In the last live stream, we used this tool called a Fibonacci retracement. And what this does is it shows you where is the likely price point of where the price will actually retrace, so you know where to buy, okay? So as we talked about in the live stream, the golden ratio is this section right here. I'm gonna go ahead and create a circle so you guys know which is the golden ratio. Now I'm gonna go ahead and draw a trend line so we can see where that line crosses. And I'm gonna go ahead and make that line pink so we can see it's nice and bright. So say for example, we see a lot of sell pressure, we want to get in, but we're scared. So what we do is we wait till it gets close to where the golden ratio is. And the golden ratio, by here, we're already in on the buy candle here, okay? Perfect.
So based on the golden ratio, you can choose like a confirmation point where you want to get in.
Correct. So the golden ratio, which is the Fibonacci retracement, it is a tool that shows you the retracement level. So this would be a 50% retracement level, or actually about near 50% retracement level of the decline.
Upper decline.
So we can also use the Fibonacci on a decline or an upcline, same way.
Okay,
All right?
that makes sense.
Perfect. All right, so let's go over to our last example here. And I hope you guys like these candle wicks. On these, I actually drew myself. It took me quite some time to actually physically draw them. Yeah, these I actually drew them myself. So I hope you guys appreciate that. It took quite some time. So in this example, I'm going to explain what I was talking about here, open and closes, and identify how that works. So the first candle, we have extremely strong sell pressure, okay? So what happens is that if you follow where the crosshairs are, this is where it closed, and then this is where it opened. So if something is going down, the next candle is going to open at the bottom of the closing on the sell, okay? So now we have a buy. So as we can see, this one closed here and opened right here, adjacent to it, okay? Slightly adjacent to it. And now we have the buy. So the buy is going to be adjacent to the sell, right above it, right next to it, okay? So now we have another buying candle. So what it does is it's going to line up exactly, this close is going to be, this is open, so it's going to be higher. So we have slightly uptrend. And as we can see, these two candles right here, this buy and this sell. So this candle, it closed here, and this one opened at the same spot. Well, what happened here? We had extreme sell pressure, right, Frank?
Yes.
And then now, more sell pressure, more buying pressure, okay? So it gets to the point where we get to this little spot right here. This is what we learned earlier, which is the doji, okay? So as we can see, the doji, what does it signify?
When the close and the sell are very close to, the sell and the buy are very close to each other.
You got it. All right. So as we can see, we have a lot of fighting going on right here. A lot of fighting between the buyers and the sellers. And then here we have the indecisive candle here. And then right at the next candle, we have impulse, confirmation. And that means it's a point to go ahead and take a position. Again, remember guys, this is not financial advice. And this is my point of view and educational purposes only. Okay, guys, just keep that in mind. What can we do here, Frank? We can go ahead and use our
Fibonacci retracement.
You got it. There we go. So we can go ahead and apply the Fibonacci here. And the way we apply is we start from the very top of the sell pressure to the very bottom of the last sell pressure.
Okay.
Okay. So we're going to go ahead and do the same thing. Draw our trend line right at the golden ratio of 0.618.
So let me ask a question right now.
Go ahead.
So for the pink line, how do you know where to draw it?
Okay, so my trend line, I'm using this trend line, lining it up with the Fibonacci golden ratio of 0.618. The way I'm creating the trend line is it's a retracement. So it's retracing. Retracement means that the price is going back down temporarily.
Okay.
So we draw the trend line where the price point is temporarily declining to.
Declining, okay.
So as we can see here, we had a decline. It comes back up right at the confirmation candle. As I said, we had the impulse candle. Now we have the confirmation. Where does the golden ratio line up? Right on the confirmation candle. And from the rest is all profit.
Okay, so that's how you create your trend line.
You got it, Frank.
Understood.
Just wanted to show you guys just an example, understanding a little bit of more on how candle wicks work. I hope that you guys learned a little bit more about this module. We just showed a little bit example about how to read candle wicks. Really appreciate you guys coming out here to support us. If you guys have any questions, do put it in the comments, or if you guys are a little bit shy, you can always go to our Facebook, and you can always make sure to follow our Facebook. You can message us anytime if you have any personal questions that you want to know, or maybe some content that you're looking forward to. We can probably, maybe think about it and figure out whether it's something that we can do or something, that would work for the channel. So I want to say thank you everybody again, and thank you Frank for joining us.
Thank you for teaching me some of the new stuff that I found very interesting and very useful.
Yeah, I appreciate it, Frank. Thank you.
And like Alex said, this is not financial advice. We trade at our own risks, but we're here to just get more knowledge out there for you guys, so you guys can be more aware of what you're investing in and when to get in, or when to get out.
Correct. As Frank said, yeah, we're just trying to do our best to help educate everybody on understanding a little bit more about the stock market, understand the fundamental, the technical side, putting it all together as a package to better suit and better prepare yourself as a trader and investor to make better and successful decisions and feel confident about what you're doing. Well, thank you everybody again. We really appreciate it, and we'll see you next time.
Thank you for joining us. Bye-bye.